Now, the addition and deduction section are very similar. In the addition section, you pretty much document any additional payments you're making to an employee outside of their gross salary. So things like overtime payments, employee of the month payments, or any additional refund that's outside of their salary, you document it in the addition section. In the same way, for deductions, any reduction from their salary. So things like maybe if you have an attendance policy and you deduct certain amounts for late marks, you can enter that in the deduction section. On paid leave, you enter that into the deduction section. Pretty much any amount of money that you're deducting from the employee's salary, you document it there. Now, they work just like other sections. We're currently in the addition section. You simply click on the add addition, pops up the form. You enter the date you're making the payments. Now, this is important. So if I indicate December here, this is going to be added to December payroll. If I indicate January here, to be added to the January payroll summary. So I'm going to leave December. We'll just select rows random, and let's be enter 10,000. Let's assume this is the end of the year bonus. Once I click enter, it's going to store it. So when generating my payroll for the month of December, it's going to add 10,000 to rows random salary. To add another, I simply click on add new. I enter the dates. I can modify the day, the month, or the year. I indicate the employee name, John Phillips, the amount, for instance, 20,000. Let's say this is the employee of the month's payments. And I indicate the months that the employee is being paid for. And it stores that. So the reason for addition is important so that if you're referencing this in the future, you can always remember the reason why this amount was paid to this employee in addition to their salary in this month. So that's pretty much how the addition section works. You click on add addition, supply the values, click on enter. To delete any addition, so maybe you entered it in error, you simply click on any cell in that row. Notice I've clicked on this cell. Click on delete. It's going to ask, are you sure you want to delete the bonus to John Phillips? If you do, you click yes. If you don't, you click no. Next, we have overtime. Now, overtime we created another section for overtime because some companies like knowing the total amount that they spend on overtime in a particular period. So to add overtime, you simply click on add overtime and it takes you to that section of the template. It works the same as the addition section. You just click on add overtime, indicate the dates, the employee name, for instance, Adam Trump, the amounts, and the reason for overtime. That's 15,000. This can be maybe extra hours on the 22nd on, manager's requests. So kind of try to be as descriptive as possible under the reason. And once you click enter, it's going to store that overtime. So we know that additional 15,000 will be added to Adam Trump's salary in December. And the reason is he or she worked extra hours on the 22nd. To add another, you repeat the process, add overtime, enter the dates, the employee's name, the amounts, and this can be the same, this can be extra hours, and the dates. So that's how the overtime section works. So I've covered the addition section. This is where you document any additional payments made to a staff. Now at the top here, you notice the fourth button is the salary review button. Now this is used to document any salary review. So recall in the employee section, when you're adding a new employee, you indicate their starting salary. So that's their salary as at the date of employment. And recall we indicated 150 for Rose, 300 and 170 for Adam Trump. So this is what they start with. Now let's assume that John Phillips was employed on the 1st of April, 2017. So let's assume that on the 1st of this year, there was a review and he was promoted from 300 to 350. So to store that into the template, you make use of the salary review section. So you simply go to additions, click on salary review, click on add review, and then enter the information. So the review date, this will be the 1st of January this year. The employee's name, which will be John Phillips. The current salary will be automatically returned. So the moment you select the employee, the template will automatically return the current salary. So you don't have to type that. I'm going to change it back to John Phillips. And the new salary is 350. Now the reason for review, it's necessary. So this can be promotion, after KPI review. So once you're done, you click on enter and it's going to store that to the database. So you notice the review date, the employee name, the new salary, and their current salary. Now this section is also important for you to be able to glance. So at a glance, you can open the section and know all the salary reviews that you've undertaken, the employees, that are related to the reviews, the current salary as at the review, and then the new salary effective from the review date. So this information we've entered now, when you're generating a payroll from the 1st of January, so 1st of January, 2nd February up until today, it's going to make use of the new salary. However, whenever you generate a payroll earlier than this date, the template will use the old salary. So that's how dynamic the template is. So I'm going to demonstrate that when I'm generating the reports. Now going back to the employee section, on the second row, if we scroll to the right, we should now see that we have salary review, which is 350, and then the review date. So from the employee section, you can already get a glance at the most recent salary, which is 350, and the most recent review date, which is the 1st of January 2018. And this is dynamic. So if for any reason, let's assume that in July this year, there was another review for this employee. So from 350 now to 370. All I need to do is to go to the salary review section. So I go to additions, salary review, add review. And I'm going to make this the 1st of July. I'm going to select the staff. It's going to tell me the current salary now is 350. I'm going to review this to 370. And this can also be, promotion, excellent performance, obviously, this will be a better reason. Once you click on enter, it's going to store that. And now we have 2 reviews. It's the same employee, different dates, and different salaries, different reasons. So now if I go to my employee section, under the current salary should now show 370 in place of 350. So if I go to my employee section, if I scroll to the right, you notice it's now 370 and the 1st of July 2018. So that's how dynamic the template is. It will always show you the most recent salary and the most recent review date. And the advantage of this, let me just explain that again. If I go back to my additions, review, if you're generating a payroll on the 2nd, that's the 2nd month, February, the template is going to use 350,000. But if you're generating a payroll in the month of August, the template is going to use 370. So that's how dynamic the template is. So that pretty much covers the salary review. Very straightforward. Whenever you review an employee salary, you document it here. You can also review it downwards. So a review isn't always an increment. So if you're reducing the salary of the employee, it's the same thing. The only thing is the new salary will be less than the current salary. So you can use it for increments and decrements. So that's a summary of this functionality. So we've covered the first 4 sections. We're moving on to the deduction section. I won't spend so much time on the deduction section so as to shorten the length of the video. It works exactly the same as the additions. You click on add addition, the date, add deduction, the date, the employee name, the amount you're deducting, and this can be for 3 late marks. So that's attendance related. Okay, so that way at a glance, the reason for this deduction is because this employee came late. And you can even be more specific and indicate the 3 days the employee came late or the months in which this deduction is related to. But when you're generating December payroll now, the template will automatically reduce 5,000 from Rose Random's salary. So that's a summary of all the functionalities. Now we can move on to the interesting reports. So clicking on the payroll button opens up the payroll. Now this is the crux of the template. The template will automatically generate a monthly payroll for your permanent staff and also for your contract staff. So before I do a practical demonstration, firstly I need to point out what makes up an employee salary. So the template supports up to 6 expenses that makes up an employee salary. By default, it's the basic, the housing, transportation, utility, communication, and other. Now, this can be modified to better suit your business. If you break it down only into BHR, that's the first 3, you can equally delete these other 3 from being listed on your payroll. So to do that, you simply go to the dashboard and it's under the custom report. So under employee, we have custom report. And you notice a button here that says edit lists. Sorry we put it here, but this is the current location. So once you click on edit lists, you notice it takes you to the drop down list section. Okay, so this is where you can modify the leave type, which we covered in the employee section. I'm going to do that after. First, I'm going to cover the salary breakdown. Now, as I said, the template supports up to 6 categories. So the basic, housing, transport, utility, communication, and other. Now, if I delete the last 3, so I just highlighted and click delete on my keyboard. If I go back to my payroll, you notice that those columns will be blank. Okay, so it will automatically not be listed. So now it lists only basic, housing, and transport. If I want those sections to be listed, I simply add them back. So you have the option of modifying it to suit your company. So if after BHT, maybe the next you offer is telephone, you can go ahead and put that in. Pretty much you can define it to better suit your business. Now, next is the percentage of the salary. Okay, so they should total up 100. And here we have a message that would automatically tell you when you exceed 100% or when you're below 100%. So if I delete all the percentages as the default value, you notice it tells us in red, not up to 100%. So the sum total of the 6 categories should be 100%, not more, not less, because this is what constitutes your salary. Okay, so for instance, for the first employee, Rose, we indicated that she has a monthly salary of 150. Now this 150 is to be broken down into the categories that we just listed here. So how many percent of the salary is the basic? Let's assume 50%. How many percent of the salary is housing? Let's assume 20%. So that means we still have 30% left. So you can split that into the rest. So I can put 10 here, 10 here, and 5 and 5. And that gives me exactly 100. So it tells me exactly 100. It's in green, meaning this is perfect. This works. And if I go back to my payroll, it will automatically list the categories. And at the top, in a faint font, you can be able to see the 50, 20, 10, 10, 5, 5. So that's how you modify the values that constitute the salary. Okay, so it's in the employee section. You simply click on custom report and edit the list. Now, as I said, you can, use, for instance, only 3. So I can increase this to 30. So the template is going to calculate 50% as my basic, 20 as my housing, and 30 as my transport. Okay, so that's pretty much how you can modify what makes up the salary, but it should not exceed 100. It should be exactly equal to 100. On the right, we equally used the underlining factors on which the payroll template is powered. The NHF is 2.5% of your basic. So if your basic is 50% of the salary, so that means 2.5% of 75 for Rose Randoms is what will be the NHF contribution. The pension, in the same way, 8% is the employee, 10% the employer. So 8% of your gross salary. So that's a combination of your basic, housing, transport, everything together. So 80% of that is what will be deducted as your pension. Now, these are non-taxable deductions. So these are the 2 plus the NHIS. Those are the 3 non-taxable deductions that the template takes into account. Every other amount is taxable. So that covers that. So going back to the payroll section, that's how we arrive at the values here. So the template will automatically return the employee's name, their designation, the account details, the breakdown. So it's going to divide their salary 50%, 20, and so on, scrolling to the right. Then we have the other columns. The total salary, this is a gross emolument. So the value you enter in the employee section is what will be listed here. The CRA, this is the Consolidated Relief Allowance. So basically the Consolidated Relief Allowance, it's 200,000 subject to a minimum of 1% of the gross income, whichever is higher. So either 200,000 or 1% of your gross. The higher value plus 20% of the gross income. So the template has been designed to automatically calculate that for you. So it will automatically look at the employee salary and then calculate it using the weighted scale. So recall the weighted scale is in several categories depending on the amounts. So we have for the first 7%, 11%, 15, 19, and so on. So you don't need to do any calculations again. The template will automatically do that for you. Here it will list the employee's total salary, the consolidated relief allowance, the pension amount, the housing, NHIS, and to tell you your taxable income. Now the taxable income is pretty much the sum of the non-taxable deductions from the total salary. The difference will give you your taxable income. From your taxable income, the template will arrive at your payee, which is the personal income tax, using the weighted scale that I just listed, the percentages. Then next we have the employer pension contribution, which is 10% of your gross salary. Loan, if the employee applied for loan, it will automatically list the total amount to be deducted for loan payments or salary advance. Leave allowance is going to add it here, overtime, bonus, other deduction, and then lastly, your net pay. So I'm just going to refresh the report now. Before I do that, the first thing I need to do is to enter the date. If I don't and I click refresh, the template is going to tell me enter a valid date. So to kickstart the payroll report, you need to enter the date. Now you can enter any date. So if I want to generate payroll for December, I enter any day in December. Payroll for November, any day in November. So I'm going to enter December. So I'm just going to use the last day, which is the 31st of December 2018. So now I've entered the date. You know, the template automatically reflects it's here, December 2018 payroll. This is for permanent staff. Once I click refresh, the template will automatically list all of my employees that are permanent staff. There we go. We have 3 employees. their designations, bank accounts, their account numbers, their basic salary. So it will automatically calculate their basic using their total. So here we have, if I scroll to the right, we have the total salaries. So 150, since we said 50% basic, so that would be 75. For 370, that will be this. So it's automatically calculate the basic, which is 50% as we indicated. Recall you can modify the percentages. Housing, which is 20% as we indicated. Transport. And at the bottom, we have the grand total. To do the same for all the other categories, if you keep scrolling to the right, you notice we can always see the employee's name here. So this section of the field or the page is locked. So if I keep scrolling to the right, we have our total salaries, the total for all employees, our consolidated relief allowance for all employees, the pension. Recall I said pension is 8% of the gross. So 8% of 150 gives us 12. 8% of 370 gives us 29, a bit over 29,000. So this is 8%. The housing, this is 2.5% of the basic, not the total. So recall the basic for this employee is 75. So 2.5% of 75 gives us this. This is the NHF, National Housing. Then we have the health insurance scheme, NHIS. And this is dependent on what you entered. Recall in the employee section, we indicated the monthly amount. So we indicated 1,005 and 500. Next, we have the taxable income, which, as I said, is the difference between the total and the sum of all non-taxable deductions. Then we arrive at the taxable income. Using the taxable income, the template will calculate the payee for you automatically. That's the total. The employer contribution, this 10% of the gross salary. It's going to calculate that for you. And the loan. So notice it says for loan, Rose Random is paying 10,000 this month. The others are not paying anything. Let's confirm. So going to the employee section, or rather the loan section, you will notice that Rose Random is the only one that's owing us 10,000. We entered loan for John Phillips, but recall this loan started on the first day in July up until the 31st of October. So by October 31st, this loan has been cleared off. So the only person that's still owing us money is Rose. Now, if I generate the same report but for an earlier month, for instance, October, we should see that 10,000 is reflected for John Phillips. So let's just quickly do that. Very easy. If I want to generate a payroll for October, all I need to do is to change this date to October. Click on refresh. You notice it automatically reflects October here. Once I click refresh, it's going to automatically return the payroll for the month of October 2018. If I scroll to the right, we should see under loan, Rose Random pays nothing now, but 10,000 is under John Phillips. So that's how dynamic the template is. It's going to let you know any employee that owes you money and has to pay in that current month. Scrolling to the right, we have other deductions. We have the leave allowance, overtime, and bonus. Now, in the month of October, everything is blank, but recall we entered some values for December. So I'm just going to regenerate the report for December, which doesn't even take me a second. All I need to do here is to change the dates to December. Click on refresh, and it will automatically refresh the report for December 2018. So if I scroll to the right, we should now see overtime, 4,000, Rose Random, bonus 10,000, and a 5,000 deduction, just as we entered. In the same way, 20,000 bonus for John Phillips. I think that was the employee of the month. We have 15,000 overtime, which was for John Adam Trump, manager's request. So it will automatically add these additional values to the employee's net pay. So you don't have to do any manual calculation on your own. And there we go. So this is the net pay. This is the total amount of it together. Okay, so that's how the template works. To automatically calculate this payroll for you. Now, the other thing I want to show is the salary review. Recall that we reviewed one of the salaries of one employee. I think it was John Phillips. So if I go to my review section, which is under additions, review. So if I generate a report for January 2018, I should see a salary of $350 for John. Let's see if that's correct. So going back to my payroll, changing this from December to January. Clicking on recall right now, it shows, let me scroll to the right. Right now, it still shows 350. So there won't be any difference really, but let me just refresh it. So we should see the balance, which is 350. There we go. But if I change the date now to July, which I think is when we did the salary review, and I click refresh, we should now see the salary has increased to 370. So that's how dynamic the template is, 370. So any payroll you generate before the review date, it will use the existing salary as at that date. Okay, so I hope that's clear. Let me just do the last explanation. The employee started with 300,000. So that means if I generate any payroll for the month of April in 2000 or any month in 2017, we should see 300,000. The employee was employed on the 1st of April. So that means any payroll before the 1st of April 2017 should only show Adam Trump, because Rose Random wasn't yet employed then, John Phillips wasn't yet employed then. So first I'm going to generate a payroll just to show you for the 1st of January 2017. We should only see Adam Trump. So that's the 1st of January 2017. So there we go, 1st of January, January 2017. Once I click refresh, we should see only one employee, which is Adam Trump, because she's the only one that was employed. There we go. You notice every other record is cleared. Only Adam Trump, 170. If I change this to April, let me just make this the last day in the month of April, we should now see 2 employees, because by now we have employed John Williams. If you enter an incorrect date, you get this prompt that this is the format of the date. So I'm just going to retry, because there are only 30 days in April, but I entered 31. So I'm going to change that to 30. I'm going to click refresh, and now we should see 2 employees, Adams and John Williams. So you notice instantaneously it has automatically entered the 2 employees. 300,000 for John, because as at April 2017, the salary was still 300,000. However, in 2018, the salary was reviewed. So if I change this now to 2018, January, you'll notice that Adam Trump's salary is still going to be 170, because I don't think we reviewed it. But if I click refresh, you notice John Phillips' salary will have increased to 350 from 300. There we go. And as at this date, Rose has been employed, so that's why the 3 are listed. So that's a 150, 350, 170. And if I change this to December, we should see that the salary has been further increased to 370 from 350. Okay, so that's how dynamic the template is, and that's what the salary review section does. It enables you be able to pull past payroll, because it uses the effective date as at the day you specify here. So I think I've covered all the features of the payroll. So it will automatically generate that for you. And the next useful thing that the template does is it generates payslips. So if you have 20 employees, it's going to automatically generate a payslip for each of the 20 employees. So I'm going to, these are the 3 employees we have. If I click payslip and I refresh the payslip, so this is the format of the payslip. The company name will be replaced by your company name. The template will automatically return the employee name, the period, the designation salary, the earnings on the left, and the deductions on the right, and then the net pay at the bottom. So this can be printed out and it can be printed out and cut into pieces and then distributed to the employee. So once I click refresh, you notice it automatically populates this payroll. There we go. So the first goes random, the dates. She's an admin officer, and this is the salary. The basic, 50%, the housing, and the transportation, 30%. Bonus of 10%, overtime of 4%. So this is the total earnings, the sum of everything together. On the right, we have the deductions. This is the payee, the loan that she's paying back, the pension, other deductions, the total. The difference between the two gives us our net pay. The same for John Phillips. The basic, which is 50% of the 370. This is our HR officer, the breakdown, the net salary. So it's going to do that. And the last one is going to do the grand total. So it's going to do the 3 employees and add an additional 1 for the grand total of everything together. So the basic for all the employees, the housing for all, and then the net pay for all. So the last pay slip is a cumulative total of all the employees. So this is done for you instantaneously once you click the refresh button. And just to see a print preview quickly, so you can see how it looks on an A4 page. So this is it. So it's going to print 4 payslips per page. So you can then use the scissors to cut it into pieces and then distribute to everybody. So that's a summary of how the payslip works. Next, we have our contract staff. Recall, this is for permanent staff. So this is permanent staff. Now we have a replica of this. Once you click on the contract staff payroll, it's exactly the same, but this will generate a report only for contract staff. So if I enter any date and I click refresh, you notice nothing will be shown because we have no contract staff. All of our staff are permanent. So notice the total, everything is 0. But if I quickly add, very quickly, just to demonstrate how the contract staff work. So I'm just going to, and I'm just going to use only the valid field. So I'm going to skip all the other fields. It's going to be contract staff, very important. The hire dates, I can make it the first day of this month. This can be a manager level or, officer. That's if they're eligible to leave. If they're not, you can go ahead and just ignore that. The salary, let's make this 50,000. Pension will be no, NHF will be no, so they're not entitled to any form of tax or statutory deduction. So once you click on enter, it's going to store that employee. So we have the 4th employee there. This is a contract staff. And let me just add, this can be a cleaner. So if I go back to my payroll and I generate my permanent staff payroll, you notice that that employee is not going to be listed here because that's a contract staff. So you notice only the 3 employees. However, if I go to the contract staff payroll and I click refresh, we should now see the Andrews that I just added. There we go. Andrews Mary, it's a cleaner, and this is it. So notice there are no salary breakdown. It's just the total salary. So no basic allowance and all of that. It's just salary, loan, if there's leave allowance, overtime bonus, and then we have the net pay. So that's a summary of how this works.